In today's episode, we are going to be breaking down cross margin trading, because when I started trading on Bitmex, on Bybit, there wasn't a lot of interesting videos on YouTube, especially defining what cross margin trading is. Like, I didn't even really know the basic difference between isolated margin and cross margin trading. So this is one of the reasons why I really wanted to take this humble opportunity to share the little knowledge that I have. So before jumping into the video, I just want to remind you that leverage trading is extremely risky. So whatever you do, if you haven't done any leverage trading at all, I just want to take this humble opportunity to remind you that it is indeed extremely risky. I wouldn't advise anybody to jump into leverage trading. So without further ado, I go by the name of Muna. Welcome to Beyond 10X. Happy New Year. Happy 2020. We are still here and we're going to be making a whole lot of profits. Cross margin trading is also known as spread margin, which is a margin method that utilizes the full amount of funds in the available balance to avoid liquidations. Any realized P&L from other positions can aid in adding margin on a losing position. So basically, cross margin trade relies on the funds which are available in your account balance. Let's say, for example, you have about 1,000 US dollars in your account balance, right? So if you place a cross margin trade of about 1,000, right? So in case that trade goes wrong, then the money is going to be deducted automatically from your existing account balance to supplement your position in order for you not to get liquidated. So that's basically the major difference between isolated margin versus cross margin. So basically, isolated margin relies, or rather, it just basically uses the position size that you have allocated to that particular trade, and then let's say, for example, you get liquidated, right? Only that money that was allocated to that particular position is going to get liquidated. But when it comes to cross margin trading, right, your whole entire portfolio is just going to keep on getting eaten bit by bit until you no longer have the sufficient funds to supplement that particular position, if you know what I mean. So that's a basic definition of cross margin trading, just off of the top of my head. So so if you guys don't really have a Bitmex account, it's very easy to use. I'm actually using the testnet. This is like a free version where you can get to like use free money provided by Bitmex. So what I would advise you to do right now is don't try to experiment on your actual Bitmex account. Just try to open up, like a fake account on testnet.bitmex.com. So this is the URL. So you can just like basically get to practice right over here. So as you can see, I have about 0.023 BTC. So that's equivalent to about 159 US dollars. So for example, if you want to use isolated margin, right, if you want to use about 2x, you can just simply slide this gear right over here, and then you're going to be using isolated margin. But in this particular case, we're going to be focusing on cross. So just have the gear right over there, and then you're going to be very good to go. So for example, here we've got different contracts. We've got perpetual, we've got the March contracts, and we've also got the June 26th contract. So I'm obviously going to be using perpetual because it has got like a lot of liquidity, and then I'm just simply going to be able to like put in the number of contracts right over here. Let's say, for example, I wanted to use about 50 contracts, and then I would just simply buy. But I'm obviously not going to be using market. I'm going to be using limit due to the fact that I really want to avoid all the fees, right? So for example, I can just do that and then put up my limit order right there. So for example, I have an active order which is going to be about 50 contracts worth of BTC at about 6,940. So let me just cancel that trade. But the most important thing that I really wanted to talk to you guys about when it comes to cross margin trading is obviously getting to use a calculator. A lot of people don't really get to utilize this very important feature of Bitmex because, I don't know, it's very hidden. It's very difficult for you guys to like see it. So it's very important for you guys to like get to calculate before you do any particular trade, because this thing is going to help you avoid liquidations. So basically a calculator can help you, figure out your liquidation price, your potential liquidation price. So let's say, for example, I wanted to buy 50 contracts worth of BTC on cross. I was going to long, right? So just make sure that the gear is highlighted on the cross section right over here, and this is obviously my wallet balance, and I wanted to go long at about 6,940. Okay, so according to the account balance that I have and the amount of contracts that I'm going to be allocating to this particular trade, right, my liquidation price is going to be at 1,655 US dollars. So if you take a look at the current price, which is about 6,944, and my liquidation price, which is about 1,655, right, there's like a very huge discrepancy, and the price, or rather the liquidation price, is very, very far. So like this, you can really get to determine where your liquidation area is going to be if you are able to trade with certain contracts, if I can put it that way. So just hold on, let me just drink a little bit of water. I seem to be getting dehydrated. So let's say you wanted to use more contracts, right? Let's say we use about 100 contracts. Where is our liquidation going to be? So we are going to have a liquidation price of about 2,676. If we look at the current price, that is like way too far, right? And then let's try to increase our contracts. If we use about 1,000 contracts, right, we're going to have a liquidation price of about 6,017 US dollars, which is pretty close, if I can put it that way. So like this, you can get to understand where your liquidation price is, and then you're going to be able to properly calculate as far as the number of contracts you are able to use, and just basically how risky your trades are going to be. But the most important thing that I really wanted to remind you guys is when it comes to cross margin trading, right, the best practice is obviously getting to use only 1/10 of your entire cryptocurrency portfolio. Let's say, for example, you have about let me just use this particular example, right? Let's say I had about 159. This is the amount of money that I have. I mean, if you get to convert the 0.0230 BTC to about United States dollars, right, this is the amount of money that I have, about 159, right? So in theory, or rather the best practice, is me only getting to use about $15.09, because that's about 1/10 of my position. So whenever you use cross margin trading, right, only get to use about 1/10 of your cryptocurrency portfolio, or rather your account portfolio. Okay, like that, you're going to be able to give yourself a little bit of legway in case your trade doesn't really get to perform as you expected it to. So like that, you're going to have enough money in your account balance to supplement, or rather keep your trade or your position going, because let's say, for example, your stop loss doesn't really get triggered, right? Like that, you're going to be able to supplement, or rather just keep your position alive, and then you're going to be able to have enough money to cover for all your potential losses. This is only in extreme circumstances where the price goes in the wrong direction. So that is one of the most important rules that you guys have to always remember. When it comes to cross margin trading, kindly use only 1/10 of your account balance. Like that, you're going to have enough legway in case the price goes in the other direction. But of course, you're supposed to use very important practices when it comes to trading, such as stop losses, because like that, you're going to be able to prevent yourself from having a whole lot of losses when it comes to the market going in the opposite direction, with relative to your cryptocurrency trading strategy, if you know what I mean. So always make sure you use a stop loss. So that's basically the gist of how you're supposed to carry out a cross margin trade. So the most important thing is you getting to understand how far your liquidation price is. That is very important. And just in order for you to have a better understanding, just come to this calculator right over here on Bitmex. Just click in the calculator. Then if you're going to be longing, you just simply enter the price and you enter the amount of contracts that you're going to be using, provided you are going to be using the best practice that I told you, right? So in this particular case, we're just using like random figures because I wanted to show you the difference, or rather how the liquidation price usually gets to differ with regards to the amount of contracts that you are willing to like put in a trade, if you know what I mean. So this is very, very important. So always try to like figure out the liquidation price way in advance before you actually place a trade, because when you place a trade without you getting to understand your risk in terms of your liquidation price, you are going to end up losing a whole lot of money. So getting to use stop losses is also something which is going to help you, but that's going to be another topic for another day, because I really want to like break everything like step by step. So I really hope that you understood everything that I talked about in this particular video. Of course, I'm very it's very difficult for me to like explain these things, so if you guys really want to like find out more information, you can just simply type all those comments in the comment section below, and I'm definitely going to be able to like help you out. But the most important thing is, when you're using cross margin trading, look at your liquidation area, use the calculator, make sure you only use 1/10 of your account balance, because like that you're going to be able to have a little bit of leeway in case the trade goes in the wrong direction, and in case your stop loss doesn't really get executed, in order to save your account balance. So yeah, I think that's basically about it. I'm going to talk to you guys a little bit later. Enjoy, take care, and happy trading.